This is the luxury world. Get inspired with us today and tomorrow. The luxury watch market has recently seen a significant shift, with Rolex taking a more proactive role in curbing the phenomenon of flipping, which has long been prevalent among collectors and investors. This strategy of flipping, where individuals acquire highly sought-after Rolex models and resell them at a premium, has evolved from a niche hobby into a booming industry. In response to this, Rolex has implemented stricter controls on its product distribution, making it more challenging for individuals to purchase these timepieces with the intent of reselling them quickly for profit. In today's video brought to you by the Luxury World, we will pull back the curtain with an insider, a seasoned authorized Rolex dealer, who's ready to lay bare the shifting landscape and explain exactly why the golden age of Rolex flipping might just be over. Get ready for some straight talk and perhaps a few surprises about the current state of the market. If you have not subscribed to our channel yet, make sure to do so to stay informed on future updates. As of late, entering a Rolex boutique is not unlike gaining access to an exclusive club. Customers now face restrictions, such as the limitation of one watch per person, and often, they must provide proof of identification before making a purchase. Additionally, Rolex has expressed interest in increasing its production numbers, a move designed to cool the inflated resale prices that have plagued the market for years. The company is also focusing on offering bespoke services and exclusive events aimed at rewarding true enthusiasts, signaling a clear shift towards preserving the brand's legacy of luxury and authenticity, rather than fostering a fast-paced, profit-driven market. The Rolex market's evolution into a space where flipping is commonplace has led to significant changes in both the dynamics of supply and demand and the overall perception of luxury watch ownership. Rolex flipping, once a quiet and discreet activity, became more widespread as individuals began to recognize the potential for substantial financial gains. The allure of fast profits from reselling rare models grew stronger, especially with the rising demand for luxury watches during the global pandemic. Before delving further into the impact of the pandemic on the market, it is important to recognize how Rolex's deliberate scarcity strategy has shaped consumer behavior. The brand's practice of limiting the availability of its most desirable models has created a sense of urgency and exclusivity, which, when combined with high demand, has fueled the flipping phenomenon. As the pandemic unfolded, central banks took action to stimulate economic activity, including reducing interest rates. This created a favorable environment for luxury purchases, further elevating Rolex's status as a symbol of wealth and success. Many consumers began to view Rolex watches not merely as accessories, but as valuable investments that would appreciate over time, much like fine wine. The rise of digital platforms and social media further fueled this trend. Flippers were able to showcase their watches on a global stage, reaching a larger pool of potential buyers and inflating demand. This visibility led to price surges, which, while beneficial for those able to take advantage of the fluctuations, made the market increasingly volatile. The influx of new players into the Rolex flipping game created an environment of fierce competition, with prices fluctuating rapidly and profit margins shrinking. In addition to the growing number of flippers, the market was also influenced by economic factors such as rising interest rates. These adjustments were designed to slow down the pace of inflation and stabilize the economy, but they also had an impact on luxury goods, including Rolex watches. The increased cost of borrowing has caused some buyers to rethink their purchasing decisions, possibly leading to a cooling of the once heated Rolex market. As prices have become more unpredictable, what was once seen as a surefire investment strategy is now being viewed by some as a risky endeavor. The phenomenon of arbitrage has been particularly significant in the Rolex market. Arbitrage involves exploiting price discrepancies between different markets, buying an item in one location at a lower price, and reselling it in another for a profit. During the pandemic, Rolex watches offered a prime opportunity for this strategy, as the gap between retail prices and secondary market prices widened. Flippers were able to capitalize on this discrepancy, purchasing watches from authorized dealers and reselling them at a significant markup. However, as the market became saturated and competition intensified, the potential for profitable flips began to decrease. Another factor contributing to the shift in the Rolex market is the role of authorized dealers. These dealers are no longer merely vendors. They have become gatekeepers, carefully selecting who receives access to their limited inventory. Rolex's approach of limiting sales to individuals who are genuine collectors and enthusiasts has made it more difficult for opportunistic flippers to acquire watches in bulk at retail prices and resell them for a profit. This move has significantly reduced the availability of watches for those seeking to make quick gains through flipping. The evolving market dynamics, coupled with the tightening of Rolex's distribution practices, have led to a situation where flipping Rolex watches for profit is becoming increasingly difficult. What was once a lucrative business model has now become a high-risk activity, with profit margins shrinking and prices fluctuating unpredictably. Flippers who once enjoyed easy returns may now find themselves caught in a volatile market that is becoming more challenging to navigate. Looking ahead, the future of the Rolex market remains uncertain. The changes we are witnessing in the dynamics of supply, demand, and pricing suggest that the era of easy profits from Rolex flipping may be drawing to a close. While some individuals may still attempt to capitalize on these fluctuations, they will do so in a market that is far more unpredictable and fraught with challenges. The combination of rising interest rates, evolving consumer behavior, and Rolex's strategic tightening of distribution practices has created a market that is increasingly difficult to predict. For those still involved in the Rolex flipping game, the landscape has become more treacherous. What was once seen as a golden opportunity has transformed into a high-stakes gamble, with the potential for significant financial loss. Those who remain in the market may need to adopt new strategies or shift their focus entirely to remain profitable. The implications of this shift are significant. For genuine watch collectors, this could mean improved access to desired models at retail prices, or at least a more reasonable premium on the secondary market. For authorized dealers, it could lead to stronger relationships with loyal customers and a more sustainable business model. For Rolex, it reinforces the brand's exclusivity and long-term value. However, for those who built a business around flipping, the landscape is becoming increasingly challenging. The days of easy profits are likely over, requiring a more nuanced approach, deeper market knowledge, and perhaps a transition to other segments of the watch market. In conclusion, the once thriving Rolex flipping market is facing a period of transformation. The company's proactive measures to curb the resale market, combined with shifting economic conditions and evolving consumer attitudes, have created an environment where the easy money that flippers once made is becoming harder to come by. Whether this marks the end of the era of fast profits from Rolex flipping or simply a new phase in the luxury watch market remains to be seen. One thing is clear: the market for Rolex watches is evolving, and those involved in it must now navigate a more complex and unpredictable landscape. While the allure of these iconic timepieces will undoubtedly endure, the dynamics of the market are evolving, favoring genuine enthusiasts and long-term collectors over short-term speculators. The era of quick, risk-free profits from flipping Rolex watches appears to be fading, ushering in a new chapter in the world of luxury watch collecting. What are your thoughts on the topic we shared in this video? Let us know by leaving a comment and giving this video a thumbs up. Do not forget to subscribe to the Luxury World for more insights into the world of luxury timepieces.